Hello, what is the difference between a watch list and a portfolio? Based on my personal opinion, a watch list is a list of stocks that you analyze and trade from. And a stock portfolio is a list of stocks that you already purchased but you have not sold it yet. So let's take a look at both. So here is a list of our watch list, and those are large cap stocks, uptrending large cap stocks that we curated, we pulled from our search using ChartSwap, and we curate that based on the strategy we are going to use to have a list of stocks that we think we can analyze within an hour or so, and then we can trade from it. So, and as you can see, I believe we have about 70 or so of those stocks, and that is the stocks that I like to 79 if I didn't delay any out of it. So that is the stocks that I like to analyze on a daily basis, but I can go days or few weeks without analyzing them, but that I like to analyze on a daily basis. And if I found one that is well positioned to purchase, I will purchase. So, and the one that I highlighted are the one that we already purchased, therefore are in our portfolio. And then when we sell a stock, we'll come and take the highlight out of there. That way is in the pool of the watch list that we can trade from. Although we'll analyze the one we already have in the portfolio to see how they are doing, to see if we can sell them as we are analyzing the one that we do not have in our portfolio, to see if there is one that we can purchase. Like for instance, the one that I mark red are the one to keep an eye on because it's reaching a position that is close to the entry point that we are targeting, because we like to buy it at the purple lines, and it pulled back from it still went below this one but didn't quite reach this one, and went sideways there and start going up from there. So we are targeting it to see what it's doing. So the watch list that we just like to have constant and just analyze from, we do not change our watch list during the year much. We might just take a note next to some that we think is now really working well with the strategy we are using, therefore is worth taking out of the list, and we might just keep it in it until toward the end of the year, and we will revise the list again by probably analyzing the stocks that is the master list here, but I think this has been curated. We have 80, and we'll have a longer version of that as well. So we have the whole list there for those large cap that we pick that are well, let me see here, that are well for that could work well with our strategy. They are large cap. We have some criteria to remove some of them and keep the one we have, because we don't want too young publicly traded companies in the mix. So, and then we keep, we filter them and keep those that are upward, mostly growth and dip but still trending up, and reduce the list again to keep very specific one that we think they are good, and will be, maybe we started maybe with maybe 300 or so to maybe 100 or so type of reduction, and from there we narrow it down to again a smaller lease. We have about 66 here probably, but yeah, a smaller lease. And last year we picked the one that we will, that will be in our watch list. And then this year we have our watch list. The one that didn't work well for us last year, we didn't add them to our watch list this year. And there are some from last year that are in the list, but then we went to the master list to review them and pick some more to add it to our list. We'll continue doing that until we have a watch list that has stocks that the fluctuation of the price is comparable to the strategy we are using, or we customize our strategy in a way that works well with the stocks we are trading. Once we have a good combination of both, then we may not need to change that large cap watch list much. We might want to create a watch list for small cap or mid cap type of stocks as well on the side, and so forth. But that is a watch list. So now, what is a portfolio? We can take a look at the portfolio here, and this is the second week of September. And if it's possible, it might be a good idea to do that as well. And that is the stock, your account position, your brokerage account position. You can download that as a CSV format from your brokerage firm, from your account, and stocks that you purchase you have not sold yet that are in your account. I like to call them, that is your stock portfolio. So here we have stocks that we purchase, and for dividend income purposes, before we start trading, we start swing trading. And then we have stocks that we purchase in 2024 when we start swing trading for swing trading purposes that are still here. And then we have stocks that we purchase in this year as well. So we can go through them to see our portfolio overview for this week, second week of September. So this is a stock we purchased for swing trading, and we purchased it probably this week or last week. And this one we could well have it from last week is for swing trading. And in general, stocks that we purchased for swing trading didn't pay dividend. No, they pay dividend, we just didn't reinvest dividend. So the one that we reinvest dividend was more income. We purchased them for income, dividend income purposes. Until they become well profitable, we can sell them. And later, when we start swing trading, we stop reinvesting the dividend, but until then they pay some dividend. So you'll see some fraction of share for those. So, and this one is purchased probably last year, and we purchased it again this year when it reached a low. So we purchased it last year a little bit at a higher, like close to the high, but then when it's around the support line, this year we bought it again. And the X axis is for the dates, and the price is on the Y axis. And this one we purchased it last year, but pretty much you can see that this is swing trade the stock as well. purchased last year, and CMG is purchased this year, or probably both years. No, this year. But again, we purchased it there and sold it there. We purchased it there, but then you see it came down. So if it's because it's at the trend line that we'll want to buy it, technically when it start going up from there, we could buy. So, and because it's at the trend line there, when we come back to this one, CMG, we could make it red so that we can keep an eye on it. But because it's not yet ready to start going up from that trend line, that's why I didn't mark it red yet, or I'll mark it red sometimes and I'll take it out because it's not ready yet. So, and GHI is one we purchased last year for swing trading purposes. FGS for swing trading purchased last year. FI, we purchased it this year, probably last week. And FICO, we purchased it, probably we have two purchase there, one, and then it went down and we purchased it again. So last year we purchased it, but then it pulled back on us, and when it crossed our buying line and start going up, we bought some more. But there is this line here, there is a chance it might go down to it. It just have not reached it in a while that we think this could be where it would like to start going up from. So we will continue that. GWW is for swing trading, IRM for swing trading, IT for swing trading. So you can see those purchases that we made, and then the price went down for them. So IT will be one that we purchased, and then the price considerably went down. So we purchased it there. The arrows just shows where we purchased them. The arrows at the top facing down is where we sold them after we purchased. So we purchased it here, and then it pulled back to this line. So quite a bit of drop there. So, and we don't like to sell stocks at a loss if we can help it. Therefore, those are, in the portfolio waiting to become profitable and to be sold. So LECO is one of those that we purchased for swing trading purposes. We purchased it last year, and as you can see, we purchased it last year, and right now we have some profit in it. So, but I'm not selling it just yet. And again, we purchased it close to the high. Last year, 2024, we used short trend line swing trading strategy, and we traded quite often. And then we purchased it again, and shortly after the price went up or something like it, like it reached a new high and it stopped going higher. It was ready to start going down. So this year, around the valley line, when it start pretty much, we thought it might start going up from there, but guess what, it pulled back a little bit before it was ready. So we purchased it again because since we already have it higher up and is around the valley line, although it's not on our watch list for this year, but I still think it was good to purchase it some more so that we can lower the overall cost of both purchases, or at least of this purchase. And right now you can see that it pulled back after that again and start going up from there. But because we like to target the next new high for before we sell, we have not sold it yet, and technically this one, if we sell it, we'll have a small loss on it, and we'll have a big profit on this one. And combined is giving us that 800cc unlocked profit, unlocked, like unrealized. We have not sold it yet, so we didn't realize it. But that's an example of when you buy at a higher price but you think that's a good stocks, and you buy at a lower price, both together can average their cost in a way that you could have profit if you are considering them together. But I like to make profit on each one of those purchases before I sell it. So that is an example. So those that are non-negative numbers will be in that color without the parentheses next to them. So LEN we purchased in 2024, LLY in 2024, and in 2025 we purchased it again, so that purchasing a higher up, it must have reached no, we only purchased it once. So we purchased it last year and it pulled back on us, so we don't know if it's still going to continue going down or if it's done going down and start going up. I will assume it will continue going down until it reach this before it start going up. So it's working on the downside of the mountain on its way to the valley, so we will be trapped in it for a while. And buying it around here is like a year ago or so, or more than a year ago. And that is an example of having a stock for a long period of time in your portfolio. When it comes to swing trading purposes, that could be a long period of time, more than a year. But for the dividend income purposes, that they are the one that I'm skipping. Those we purchased them in 2023 or prior, but mostly in 2023. This when we purchased those dividend income stocks. Ali for dividend income purposes. So LOW we purchased in 2024 for swing trading, as well as LRCX, which now is profitable. And if I pull out the first week of September and we go there, you will notice that stocks was still negative last week, but this week I pulled this report this morning, so Saturday, September 13, 2025. So that means yesterday it became LRCX. Okay, so let's see if we can, no, don't need those yet. So we purchased it somewhere there pretty much after a new high, surely after that, thinking it's going to continue. But guess what? It was done with that side of the mountain and start going down to the valley. So it reached the valley here. Let's activate it. And as we pay attention to the line, we can extend it. It reached the valley there and continue down. For this one, I'm keeping an eye on this bottom of the chart, and I will say, in fact, pretty much it touched base with it. So it pulled back to the valley. It didn't really linger there because it lingered somewhere here. When it came down here, it was down with it and start going up again. So, and now it reached a new high, probably around here. So it reached a new high. So that's why we have a profit. But you can see we were in this trade since July 2024, so more than a year ago. if we sold it prior to now, we'll have a loss in it. But just by keeping it there, yeah, our money got trapped in it. You might argue that that money could have been used to trade under stocks multiple times for profit. That's correct. At the same time, there is a risk that the next purchase could be a loss as well. But anyway, or even keeping it here, this company could go bankrupt, and that's a possibility. That's why we do not trade young company stocks, but we prefer the ones that went through more than one recession, economical recession. So, but again, or like 2008 recession, but even that is not a, it's not a proof, 100% proof. They can still go bankrupt on you. So, but it reached a new high there. Now that it reached a new high, we could sell it. We bought a high, so we are not going to have a lot of profits. But because it reached a new high here, that is another journey. We will compare the previous one, which will be this point. Well, when it reached that point, it pulled back and then continue. So based on that assumption, we could decide to stay in the trade. It's going to pull back. If it's going to repeat this pattern, it might pull back, but then and continue again and pulling back, continue again for a while. So from here, which was a July, to let's say here, which is March, is about a month's time frame. When this pullback is around October, so, or November, somewhere here. So we could say, you don't need to be in it thinking you are going to have the maximum profit, but you could stay in it halfway. So if we say a month, we might say now that it reached a new high here, we might try to stay in it for 4 months or something like that. Does that make sense? So because we are getting close to holiday, so even in January, it continued all the way to March before it pulled back. So we could say if we can stay in it until December or so and see how it's doing. But the thing is, it's going to be pulling back, going up, pulling back. So we'll keep that in mind. And chances that when it pull back, if it pull back sharply like this here, we will be negative depending on how it pull back before it will start going up again. So because we purchased it so high here, so those are things you have to factor in to see if you still want to stay in the trade or just lock in that profit and get your capital out. So, but yeah, and as we continue, the next one was purchased for probably for dividend. I assume that will be, I'm not sure really. I had to check last year stock watch list. You see the terminology that I'm using to see if that was a part of last year watch list in the M section. And the one that were highlighted in yellow were the one that were in the stocks at the time the year ended, but we were not able to sell. So it's not here. So it was dividend. It was purchased for dividend income. So MANH, we purchased it this year, and we have profit in it, but we are not selling it yet. We purchased it right around that area, around at the baseline, and it start going up from there. So I have no way to go up there. MAR for swing trading, and we purchased it somewhere there. It pulled back below the line, the support line and then start going up from there. So it was a good purchase in some way, but still it went down before it started going up from there. MLM, again, for swing trading purposes, purchased it twice. We purchased it higher up there last year, and it was done going high and start pulling back. And when it reached the baseline again, we purchased some more, and now it start going up. And guess what? Now we are profitable on this one as well, and profitable on this one as well, because those prices are lower than the price it is now. But still, we are not selling it because we think it will reach a new high at some point. But and you can see we have a lot of stocks that are negative in the account, and we have few stocks that are positive in the account. So yeah, but instead of selling those positive stock, we can see how they are doing to see if they can stay longer in the trade, if we can stay longer in the trade. MPWR for swing trading purposes, MRVL for swing trading purposes, MSI for swing trading, NVR for swing trading. And NVR we purchased it last year again at a higher up, because we are swing trading using short upturn and swing trading strategy. But when that trend line ended and we purchased it again, we got trapped in it and started descending the mountain, and it reached this valley line. Although it could come down to here, but I just feel like it touched base with this valley line more than once compared to this one, which is, you know, the last time it touched base with it was some years ago. So when it reached there, we purchased it again, and now it started going up. But probably we could have purchased more share here compared to here, maybe 1 share there and 2 shares here or something like that, for us already to have a profit in it. We'll have profit here for sure, because the price is higher than where we bought it here. When I put my mouse on it, you will see the price that is highlighting compared to the price that the market closed yesterday. But compared to this one, the price is higher up. But for us to have a profit, that means the average price, when you take the total cost to the, if we sell it at this price, the difference between the two is giving us a profit. And it will be because we could have purchased 2 shares at that lowest price compared to 1 share at a higher price last year. So we have some profit there, but again, we'll want to have profit in both, from both purchases. So PCAR, we purchased it for swing trading. REGN probably last year for swing trading. ROSC for swing trading. RPM for swing trading. URY for swing trading, and that has profits as well. You'll notice that the ones that are negative, I'm not analyzing them, because again, I'm not going to sell them. So but the ones that are positive, I'm analyzing them to see if I want to stay longer in the trade, or if I want to lock in that profit. So we purchased it in 2024 at a higher price. But then when it reached, because 2025, we chose a different strategy, long uptrend and swing trading strategy, and then we trace our long uptrend lines that are longer than 1 year time frame as the entry point for us. So we are targeting those entry points when we analyze our chart. So when it reaches and start going up, we just bought it. But guess what? It pulled back again, trying to reach the lowest point 1. And similar to the stock we just look up this one didn't touch base with this line for 2 years or so, but decided to go closer to it. But then from there it started going up again, and at this point it's higher than that first purchase in 2024, and well higher up compared to this as well. So it start here, we broke even on that purchase also, but it reached a new high around this point in August. So that's something we'll keep an eye on in August. So we'll see for how long it's going to continue making new highs after pulling back every often, to see when to get out, because it's going to, you can see here, it reached a new high somewhere down here. After leaving there, reach a new high there, pull sharply back, and then continue pulling back and creating that high mountain, and then pull back again. So it'll try to have a line, a support line for the upside wall of the mountain, and I'm thinking it might continue going up until it use this line as a support line for that upside wall of the mountain, as it's claiming it going up. How long it's going to continue claiming it going up, we don't know, but we'll just try to stay in the trade for a while and then get out. We are not trying to lock in all the profits, but lock in some profits we are comfortable with, that we feel good about. So WSO, we purchase it for swing trading purposes, and for that one we can analyze it. We purchased it last year again at a higher up, and right now you see it's going way down to this valley line here. So, and if the stock is good, and I think it is, when they start going up from there, who knows, we might buy some more share. Clearly it shows that it makes a wide mountain before it makes a wide mountain. So when they start going up from there, we might buy some more. I made some good profit on these stocks last year. So, but in 2023 or so, I purchased it there and sold it there. Almost double my money there. I don't even know how many shares I purchased, maybe one or two, or maybe $4,000 or so. And then that's where it piqued my attention. I purchased it for dividend income purposes, and when it reached a new high, I sold it. And then when I start swing trading, I added to the mix, and I swing traded short uptrend and swing trading strategy. And then I purchased it again. I got trapped in it, and then in 2025 I decided to use a long uptrend and swing trading strategy so that I don't trade often. So when it reached that baseline and start going up, we might buy some more, who knows. So that is a comparison of a portfolio, a stock portfolio, and a watch list of stocks to trade from. With our strategy though, we just like to trade the same stocks over and over and over, so that we can get familiarized with those stocks charts and know what to expect. Because with our strategy, we try to rely on what happened in the past to see if there is a pattern there that is replicating itself, that we can make our assumption based on to make a decision to either buy or to either sell. So therefore, I just like to get familiarized with the chart of those stocks, and that's why I like to just curate my watch list of stocks using our master list, pulling stocks from there to the watch list. And if during the year a stock just didn't work well with the strategy we are using, we can just replace, we can take a note and later take it out and replace it with another one or so, and have a watch list of stocks that you know the number of stocks you have on that watch list. You can analyze it within 30 minutes or an hour, depending on your time availability in a day. at the end of the day after the market close, or and you're back from work and do all you need to do, or early in the morning before you go to work, or things like that, so you do that after hours, the market open hours, after outside of that window to have time to analyze it, is what the watch list in my understanding is. But it can vary from swing trader to swing trader, but for me that is what my watch list is. It's not a watch list that I turn over on a regular basis, or is the watch list for the whole year, and I can just analyze from. I put CL here because again it just does not up trading well. Purchase it there and sold it here with some profits, and was good things, because right now you see it's going down, so it just doesn't react well with the strategy we are using. It does not mean it's a bad stock. It just does not, it's not well comparable with our long up to long swing trading strategy. It's not up trading well to work with it. If you are using horizontal line type of strategy, it might work for you, but we are using uptrend line, like the oblique line, and it's not really uptrending well. And if it was for that reason, I like to take it out. But this is how I will compare a watch list, stocks to buy from, to a portfolio, stocks already purchased that is in our account that we have not sold yet. That will show unrealized profit or unrealized gain. Thank you so much for your time. In your opinion, what is a watch list for you, and what is a portfolio for you? Will you please share your point of view in the comment section? For more of swing trading related videos, will you please check the links of those playlists in the video description section. Thank you so much for watching our videos. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, Growth of Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Thank you. And as you can see, if we pick one example, for instance, the profit from this stock, if we sell it, this unrealized profit is enough, to pay 1 month of utilities and groceries. So that is one way to view it. It's 1 month of expenses, basic expenses right there, that you can pay for by selling that one stock. Thank you. Just remember to start small and go from there.